and we'll spend at least a portion of that time from Fitzwilliams Financial joining us today. Typically, you see him on our linear broadcast right around 4:35, 4:40, joining us today here in the live Impact studio. But that will not preclude him from being on our broadcast later on, doing double duty, even triple duty today. A little different here. Now, Tim, you've been doing this for a while now. We've had the Fitzwilliams Financial forecast for a little bit.
Yeah.
I'm wondering just what's changed for you from maybe week 1 and 2 to now? How are things different from you? Not in terms of the economy, but just in terms of you, in terms of being on TV, answering questions, presentation. What do you think?
Yeah, I'm definitely, I rely on my team of experts that I have, right? But now I found myself even more involved in the details of the day-to-day on the news and what's happening in the markets than I used to be. I would rely on my team of experts to help us with the portfolio and the management, but now I'm finding myself getting more involved just because I want to understand it at the most micro level so that I can come here and I can explain it to folks, because it is really complex how things are working and what's going on and whatnot. And it's interesting to be right there in our investment committee meeting and hearing it right from our chartered financial analysts, what the thoughts are of the market, what the thoughts are of oil, SpaceX, what have you, and getting these opinions so then I can come right to you the same day and explain everything.
Explain everything. Give us that insight. Give us that understanding.
Right.
Well, good. We hope that beyond just the partnership that we've established, that as we're able to get something out of this by learning from you, hopefully you're able to get something out of it too. And it sounds like maybe you have a little bit. So that's what we like to hear.
Absolutely. It keeps
cool.
us on our toes, and I love that.
And
iron sharpens iron.
And we've had the family in the studio here. We've been able
fun
to kind of get to know you guys a little bit. Now let's dive into that market. Inflation showed positive signs there for a bit. We saw what we want to see in terms of that cooling off. It is quite possibly the economic buzzword in the United States over the course of the last 3 or 4 years. Sure. All of a sudden, 10 straight days of traded aggression between the United States and Iran. The Strait of Hormuz closed once again. Energy prices likely to go up as follows. Could that hinder the progress we've seen when it comes to those inflation numbers?
Yeah, so I think it could hinder it, but I think it's a little different this time. If you notice when it first happened, it was a lot of uncertainty, right? You didn't know the moves that were going to be made. And so it had a major effect. But then people stepped back and said, we want to make sure this never happens again. People being defined as other countries, other governments, right? The U.S. came in as a major world supplier. Other countries are trying to do things. They're working to build workarounds so they don't have to go through the Strait of Hormuz. So the market, when there's bad news, can respond. And when there's good news, it can respond. But when there's uncertainty, that's when you have chaos, and that's when volatility steps in. So what I think we're seeing now is kind of an absorption of this. Like, we're ramping things up. It's getting heated. There's more strikes. There's stuff going on. Yet there's less and less volatility. It's not as spiky as it once was when we first entered into this conflict. And that's what I'm talking about. We have not so much uncertainty. We kind of know where this is going, so it's being absorbed. People see that happening. So I think we're going to see this not have as much impact on the economy as some would think that it would. I think now that we're revisiting this, it's being absorbed more and more.
Is there a market that maybe has adjusted to war? Is that something that could then potentially be a little bit dangerous going forward? Because a market takes a while and then it adjusts to the current conditions, and those conditions are war. If we are able to reach a place where there is more permanent peace, then is there growing pains as the market transitions back to maybe sort of that peacetime market that we saw for a while leading up to this?
Well, I'm not sure so much about growing pains, but what I can say is if you look at this as a spike, something that occurred that was not expected, right? An unexpected event, which is this Iran conflict, and now we maybe have a littler spike, like I was just saying, less impact. It was taking us off of the road of entering into that growth stage of the economy. So we're trying to enter into the growth stage of the economy, and that's evident by what we're seeing with the productivity and the banking reports from the banks. And we're seeing that the economy is trying to grow. And this was something that kind of threw it off its course, but not enough so that we go the opposite direction. And so we're going to get back on course, as that's our thoughts. There's going to be volatility, but we're going to be on course for that expansion that we've been talking about for so long.
Now, we talk about the United States. You and I have talked quite a bit about the United States ramping up their production of crude oil in order to maybe try to offset some of what we've seen with the Strait of Hormuz. Oftentimes, though, that production of crude oil also enters into the open market. It's not strictly for domestic use, right? And so then it still sort of becomes impacted by the global market, which we know is impacted by the Strait of Hormuz. From your perspective, looking at what's best for the United States economy, do you possibly see a benefit to creating perhaps government incentives for the crude oil that's produced here to be strictly for domestic use, and could that help get those prices down?
You have to be careful, Connor, when you start getting into regulation.
Right.
We believe regulation is a form of indirect taxation. There's positives and negatives, and so it's a very interesting balance. Just like tariffs, they're an economic tool. They're not good, they're bad, they're a tool. So it's about what are you trying to accomplish and when are you trying to do it. So you want to do as much as you possibly can. Let supply and demand work itself out. I don't think you want to add stimulus or add more law, if you will, while things are trying to work themselves out. If the market's already absorbing it and you're seeing inflation starting to slow, and the only thing you're really seeing is the oil prices that were being volatile, which of course affects gas. So I'm not hard into that, and I understand that affects the American people. However, I think we're going into a good position. We might see gas, as I've told you before, Connor, at the lowest prices we've ever seen. We just kind of got to let it play its course.
Okay.
The more we get involved, the more volatility we can have. And ultimately, when you try to control things, you can have negative results.
Okay. And when we talk about as things try to work their course, obviously for the time being, you do see those elevated prices.
Sure.
And we've seen that now since late February, early March, as this does work itself out. Is that enough time? And would you expect to see within the market maybe those industries that provide an offset or an alternative option to gas-driven industries start to become more lucrative? So is this a situation where, because we now have a slightly extended energy crisis, as diplomacy works through its process, could we potentially see an increase in perhaps an electric vehicle market or a solar panel market?
Well, I think demand's going to fall where demand falls. I just leave it up to economics. If the price stays high, although price is going to adjust faster than the price of the oil. So gas prices are going to adjust faster. And there's this fancy variance between the two that we look at, right? And so that's always going to be that way. But that doesn't mean that other markets might try to jump in and capture some of the demand, like, oh, the prices are off a little bit, because it's going to take time for the prices to come down at the gas pump. But as that occurs, sure, other people could start trying to push demand and marketing into other sources of energy. Is it a net effect that's going to be overall better than what's currently available? We don't know, right? Demand's going to fall where it falls. If somebody's kind of choking on some side of the table of demand, which is what was happening with the oil and their gas prices, then yes, something else will pop up to take its place. That's economics, right? Someone's going to create competition and try to come in. But that's happening with the oil. They're talking about moving production around the strait, so it's not even a problem. Other countries getting involved. And heck, we even had, I think it was Dubai, offering a discount to Japan to get their demand more motivated, because there was actually demand deconstruction, which, is not good, but at the same time, it can come back. So I think other companies may try, other sectors, I think is the better word, may try to come in and make a play around that. But at the end of the day, if the market's absorbing what's going on with oil and gas, then they may not have such a great advantage as they may perceive, because it might not end up being that big a deal after all when the dust settles. And if we're right that things are going to be better than where we started, I mean, imagine if the world goes the way that we're talking about it, where gas prices are at an all-time low. Well, then other companies might not be so quick to jump in and say we're the better alternative.
Right. So everything, all of the, well, one, you say maybe some substitutes are happening, but they are other means of potentially oil production as opposed to other industries, and then things would have to be bad for a much longer period of time in order for other industries to truly capitalize on
Where that
this.
was going to happen, Connor, is about, if we rewind our conversations that we've had multiple times here, if we were to go back a month and we go back to when this started kind of happening, that's where that would have came in, as we started to find that cliff, as I kept saying, or getting on the plank, if you will, of an oil crisis or of an energy crisis. We were on the plank and we were about to be in a bad spot. But things were going to start to work themselves out because it had to, because it affected everyone. It's at that moment when you're on the plank and you don't know how long you got that you might have saw alternatives and other strategies start to come to the market, but we really didn't see that so much. So it kind of tells us that by the time people saw that they were on the plank, we already started kind of working ourselves out of that chaotic situation. And again, the market absorbing it. And I think we're going to get right back to normal demand and hopefully better prices and a great outlook for the economy.
Yeah, perhaps the market is a bit more patient than we are sometimes. We want things to happen right away.
Sure.
The market, a lot of things that will work themselves out. We talked about how if another industry could jump in there, perhaps electric vehicles, were that to be the case, obviously Elon Musk has a great stake in that industry with Tesla. He also now has a tremendous stake in space exploration with SpaceX, which went public a little while ago. It was a huge story here nationally. The most lucrative IPO that we've ever seen. Could you walk us through where things stand right now? How has that IPO progressed?
Well, look, we talked about it multiple times. It's like playing at Vegas, right? It's a gamble. It's not something to invest in. There's, or rather, it probably should not be something to invest in and taken extremely serious from a large portion of your portfolio, as that wouldn't be very prudent for us to say that. We want to look at that as like a wild card, and that's exactly what it was. Look, it came out, it spiked up, and look where it's at now, right? I think we're saying it's around 120-ish. So it's one of those things that it's very hard to justify what's being said. Now, I like the company, and I like Elon Musk, and I like what he's trying to do. He's looking to make changes in humanity that we've never seen before, from living on the moon to traveling to Mars. Wild things that are beyond some people's even imagination, something you would have saw in a sci-fi flick or something, right? But he wants to make that a reality, and that's great. However, we're not there yet. And so you're asking people to bet on you, and not just bet, but bet 100 times. That's a lot to ask without having any fundamentals or any proof of going in that direction. So it's volatile.
And when you're asking someone to bet on you, obviously, especially for someone like Elon Musk, who has always been a very public-facing CEO and executive for his companies, his persona, his status as a famous person even starts to play a role in this. We know that at times that has been erratic, or at least has seemed erratic based on its portrayal, right?
Yeah, social media has a way to pick the person with the most likes at the time.
And so if he's the person with the most likes and the presentation of him can be drawn as erratic, and you're hoping that you're doing a future bet on this person to improve your financial security, for you as someone who is constantly looking at these things, how does that play into the decisions that you make in terms of whether or not something is a viable
investment? It's the same as anything else. We never get hyper over it. We don't fall into the hype. We never want to hold more than 4%, if that, of any single holding. We believe that creates what's called concentration risk, too much of one holding. And that's a risk.
Yeah. But for someone like Elon Musk or Jeff Bezos, who has a very high public profile, how much do you monitor their own sort of character that they fall into and how that impacts markets?
Well, we look at the market through different lenses, right? So we look at it through the stages of the economy. We look at it through a psychological lens, a political lens, and so and now even more a technology lens. As the CEO and how impactful they're going to be on their economy, I don't think it makes a lot of sense to drill down fully and just on that alone. Because you can talk a good talk, but you have to back it up. So we want to see fundamentals. We want to see a plan that makes sense. And Elon Musk's plan, it does make sense. It's just that it's so far ahead. And what he's asking for you to believe in at 100 times multiplier is a tough pill to swallow for most people that understand what a multiplier is. Look, you own a pizzeria. You go to sell the pizzeria. You're going to sell 1 year of revenue and maybe some of the inventory that you have, some stoves and kitchen appliances.
Yeah.
He's asking for 100 times.
Yeah.
You're changing the world as we know it if you can pull that off. So it's a big ask.
It's a big ask. But as you kind of stated, a big ask that does work in concert with the big ambitions.
Sure.
Right? It's everything that's happening around that IPO is big. So it'll be interesting to see how it plays out. You mentioned psychological factors. Could you give an example?
Yeah, absolutely. I mean, that's when you look at consumer confidence, you're looking at people's spending habits, buying habits, debt habits, things like that. That's how we look at it. What is the everyday consumer thinking as far as spending and as far as debt?
We saw consumer confidence improve numbers in that regard.
Sure did.
Here. I believe last week we spoke to you about that. Can you expand on, you get those numbers back, you see improvements. How do you read that? How do you, what role does that play in what you're putting together?
Well, it's a piece of the puzzle.
Right.
So we take the reports and we take, from the CPI to the consumer confidence to whatever we're looking at, and we use that as a piece to the overall puzzle. So we never just rely on one thing. It's multiple lenses and multiple things interacting. And then by looking at it through multiple lenses at the same time when you're studying it, then you can kind of get a picture of a story. And that's the idea. And the story that we're seeing right now, Connor, is that we're going to be into an expansion, but that expansion is going to be a little jobless. And that's because of AI. So we think people are going to have to retool and embrace that more than ever to have that expansion to keep their jobs and to continue growing.
When we talk about retooling around AI, we talk about AI in general. When there have been, when we had an internet revolution,
sure,
there were certainly a lot of worries, and a lot of worries that were ultimately founded that there would be maybe initial job loss as the internet takes the role of certain things that people have had to do for decades and decades. But then what we see is, as that revolution progresses, new jobs emerge within the sector, right? Is AI going, do you expect a similar path when it comes to the artificial intelligence revolution, where while there will be job loss due to all the capabilities of AI, there will ultimately be new jobs that emerge due to the capability of AI?
I think new jobs or higher capacities of existing jobs. Case in point, if you have an assistant and you need an Excel sheet done, it might have taken a week to gather the data and get it all in the way that you want it sorted and organized. Maybe it took a day, depending on time constraints, right?
So then
maybe it was a 2-hour project, but now it's like 2 minutes, 3 minutes for AI to read a sheet or to read data that is compiled, put it into an Excel sheet and organize it. So just take that basic concept and expand it.
Yeah.
So if I ask AI, which is a great question, everybody always asks me, do you think you're going to be replaced? No, you can pull up GPT, you can pull up Claude and ask, are they going to replace a fiduciary? Absolutely not. And they say that. The AI says it because it's impossible to do that. However, they can bring a lot to the table to make the ability for us to use tools. They're making the ability for it, right? We didn't have some of these tools without a lot of work and a lot of headache and a lot of research. Now we get data at a faster rate of return, and not only are we getting the data, we can then take the data, build tools around it that are good financial planning models, and then figure out what that looks like for the everyday consumer at a faster rate of return, right? Keeping up with laws and things like that, so that way we're giving accurate information. I think that's wonderful. I think it makes us more productive. So I think there's going to be new jobs, maybe. But I think what we're really going to see is a bigger capacity, which then allows, hopefully, for more productivity, more profit. So people should see more income, thus part of the growth of the economy, but not necessarily so much new jobs. Probably some jobs are going to be cut, but other jobs are going to have their capacity expanded because AI is going to be able to help them if they embrace it. And I think this is the good thing. I'm all about productivity. You should get paid what you earn. Productivity should set the wage, in our opinion, right? If you're good, get paid what you're worth and figure out what that metric is. I think AI is just going to help you get better. And so you can get paid more. If you can do 3 times, 4 times as much work as you used to be able to do, you go to your boss and you can show that productivity report. Well, that should also have a conversation about your pay and your responsibilities. So what I think was going to happen, Connor, is the people that are not, for quote unquote, for lack of a better word, lazy, the people that are aggressive and want to do better in life and get ahead in life are going to be the ones that embrace this.
Yeah, use the
That's going to be the thing.
Right.
The people that embrace this, I think, are going to do great with it, and they're going to relish in success from it. I think the people that don't embrace it, they're going to be more on the lazy side and like, I don't want to get with that, I don't want to learn that, I don't want to do that. They may have issues.
There's one, very well put, higher efficiency, higher productivity, expanded capacity for jobs that do exist. Number 2, I absolutely love that you asked AI if
Yeah, of
AI
course.
would come in for
Yeah, I
you.
want to know
Got
as
real
well.
meta with ChatGPT there for
Oh
for
yeah,
a
yeah.
moment.
I use AI every day, regularly, absolutely, and I think, and I'm trying to stay on the cutting edge as much as I can with it.
Very good. And we've talked to you about that
Yeah.
as well. And beyond even just your work, there are so many different ways in which it can provide you that assistance that you need.
That's right.
I like how you come from a place of not only reading the market, but of experience when it comes to this particular type of question.
You have to walk the walk.
You got to walk the walk. Absolutely. And now I think maybe what we'll do here, because we have reached a time where we got to start moving towards the end of our stream. So maybe we'll use one more question that we had as sort of a tease to 4 o'clock. Coming up 4 o'clock, really the 4:30 show, Tim Fitzwilliams will be there with us, and we're going to talk about a huge week coming up for corporate earnings, especially those major tech companies we've talked about, and why you should care about that. That'll be in the 4:30 hour of our program here coming up on 13 News Now. For the time being, we don't get you on live Impact News often, but it's always a treat when we do, so we appreciate you being here.
Love being here. Thank you so much.
Tim Fitzwilliams from Fitzwilliams Financial, from our financial forecast. He talks the talk, he walks the walk, and you can see him on 13 News Now at 4:30 coming up in an hour and a half just about here.